Hey,
What's going on, brother? How's everything? How's everybody in the think tank?
good.
Ready for the stream. Did anybody else happen to see that on Twitter today that they said that APE was the first preferred equity on the stock exchange to be halted?
I did not see that, but why am I not surprised?
Ape coming out making noise, like it's making history on the first day.
Phenomenal.
Now that's interesting.
That's something I read on Twitter. How much truth there is to it, but I thought it was interesting.
Man, it was halted a bunch.
10 freaking times.
Yeah.
That's it? Just 10 times?
They didn't want to overdo it, bro. Like 8 times, that'd be too much. Come on.
Well.
Well,
There's money!
that's it. Just 10 times.
We're going to be so motherfucking rich.
They didn't want to overdo it.
Very rich.
Everybody, thanks for coming out. Hello, my name is Marcel Kalinovic. I'm the Butcher of Wall Street. This video is the next in a series exploring the geopolitical and macro implications of over leveraging by short hedge funds and the Federal Reserve on our global financial system. All right, thank you for that server mute, guys. Good looking out. Let's try that one more time. Hello, my name is Marcel Kalinovic. I'm the Butcher of Wall Street. This video is the next in a series exploring the financial and macro implications on the global financial system due to over leveraging by prime brokers, market makers, short hedge funds, family offices, and the Federal Reserve and central banks around the world. To put it quite simply, the TLDR on this whole video, if you don't feel like watching it, is that I'm not a financial advisor. This is not financial, tax, or legal advice of any sort. Simply my opinion. And that is that of all the due diligence I've done, that too long didn't read, is we're going to be so motherfucking rich.
Very rich.
What's up, Elevator Guy? TMI's Good Vibes, Just Cheese, Bliss, Dana Young, much love. It's great to see you. Matt, Tyler, good looking out. Headstock Harem, Chris, thanks for coming out, you guys. Zoombach, Cash Money here in the think tank. FJR Pilot, Johnny Chimpo, Nate, Raindrop, Road Dog, TZ, the Kid, all you guys, thanks for showing out. Even Queen Bee and Jam Bams, all my girls, they'll be in around soon enough. Wolfie, big shout out to Wolfie AMC. Make sure you guys check him out on YouTube. Look at this crime right here. Right in the after hours. Just a massive one minute candle from $10 all the way up to $17.80. I'm sorry, it was a 5 minute candle. In the after hours, we saw more volume in the after hours than we saw all day during actual trading. Can you say the SFT program, the pawn shop program being used in order to maintain collateral and post as additional collateral for big bucks, of course, in order to maintain their margin position? That's what this is right here. JP Morgan is in charge of this, and they run the SFT program. They're the only ones that have the facility able to do it, and it's always a few minutes after market close, usually about 5 to 15 minutes after the market closes. So instead of believing guys like Meet Kevin who are out there spreading fear, uncertainty, and doubt, do your own due diligence, folks, because we've got a lot more where that came from. Limit up, limit down. Ladies and gentlemen, boys and girls, who do you think is in charge of the circuit breakers? Well, SIBO Global Markets, Robert Brooks, is the Limit Up, Limit Down Chair Advisory Board. The advisory committee consists of BlackRock's very own Hubert De Jesus, Kimberly Russell from State Street Global Advisors, who holds short positions on AMC per their most recent 13F filings, Matthew Levica of Goldman Sachs, who's over-leveraged 133 to 1 with only about $2.5 trillion in assets and around $128 trillion in liabilities in derivatives notional values.
Oh, now I'm relieved.
Joseph McCain of Citadel Securities, who just this last quarter posted a loss of 94 billions with an S. $94 billion loss. And just this last week, they had to borrow $600 million in additional trading liquidity in capital. They had to borrow $600 million worth of capital. Gee, I wonder what they needed that for. Hubert De Jesus and BlackRock have lost $1.7 trillion. That's trillion with a T in the last quarter. TD Ameritrade, who has yet to deliver some APE to certain people. Some have received it, some have not received their APE shares. Eric Knoll and Mark Rosenthal of Virtue Financial, who are the liquidity fairies, who have told us in the past that they can do anything they want. They can create as many synthetic shares and naked shorts as they want, all in the name of liquidity. And of course, not to be left out, Andrew Upward of the one and only Jane Street. Jane Street, who I'm pretty sure holds short positions on GameStop from my most recent, last time I checked, Bloomberg terminal. So the ones in charge of the limit up, limit down halts are literally the people who are shorting the stocks like AMC, APE, and GameStop. Adam Baum asks if the market crashes by the end of the year. I'm not sure, my friend. But I'd be hard-pressed to believe that this can go on much, much longer. Now, something people need to keep in mind that stocks like APE and AMC, GameStop, and any other can be abused through the use of wash sales. A wash sale is where the buyer and the seller are the same entity and no change in beneficial ownership occurs. Wash sales are illegal because they can manipulate stock prices up or down without actually changing beneficial ownership of the underlying asset. You can sell something, or should I say, pretend to sell something to yourself in order to bring the stock price down by manipulating the bid and ask spread, the NBBO, National Best Bid and Offer. This combined with spoofing, in which orders are placed and then canceled before they're actually executed, are two ways which can be very effective at shorting stocks, preferred shares like APE and AMC, amongst many others. But did you guys notice that AMC didn't drop below $10 and APE is still around the $7 range, which puts AMC 1, the basket of securities, still at the same value that we were at last week before AMC started moving up. It's around $17 to $18. And that's a fact. As of this very moment, that's where we stand with AMC and AMC 1. AMC insider filings, according to my man Ryan Rigg, the Wolf of My Street on Twitter. Big shout out to you, my friend. AMC insider filings starting to come in the after hours, showing them receiving their APE as well. Always double check those because these aren't purchases. It's their APE that they received for being an AMC shareholder. So if you're seeing insider filings from changes in beneficial ownership of securities for AMC, it's because they've been distributed their APE shares, just like people, or some people I should say, are receiving their APE shares now. So let's quell the FUD, let's quell the fear, and stop the bullshit from YouTubers who don't really understand what the fuck is going on, but just like to get a lot of clicks by saying that AMC is out to scam people. Because, as a matter of fact, I'm not a financial advisor, I don't have a crystal ball, but this is probably the least risky investment that I've ever seen in my life on the stock market, and I've been trading for over 18 years. I used and abused dry ships when it was being pumped and dumped to ridiculous numbers and underwent multiple reverse splits. It was a blast. And let me tell you, that was a lot fucking scarier than diamond handing with millions and millions of other apes who love this fucking stock. Here's the statements in case anybody wants to take a look at them. You can pause it right there. Not too urgent, so I'm not going to dwell on that. But take a look at this. APE is a major threat to exposing synthetic shares and naked shorts. Even worse than naked shorts and synthetic shares are the shorts marked as long, also known as cookbooks. Because when you cook the books, you're literally turning a liability into an asset. One trading halt on APE. Two trading halts on APE. 3, 4 trading halts on APE. Then we had, yep, you got it right, 5, 6, 7, 8, 9, and 10. But wait, there's more. 11 and 12 trading halts on APE today. Ladies and gentlemen, you guys watched HKD go up thousands of percentage points, and I believe it was halted twice. 2 times. And AMC and APE got halted multitudes of times. AMC got halted twice today, and APE was halted 12 times today. I'm sorry, AMC was halted 3 times today. My apologies for that discrepancy there. MC, huge shout out to you. Thank you for your support. As always, the think tank appreciates you, as do I. If you found some value in any of this information, please consider subscribing and sharing on social media or dropping a like so that other people can see this valuable information. Not for my ego, not because I care, but because this information does need to be shared. So thank you for that. Here you can see the limit up, limit down pauses. Big shout out to my man AMC Bigums. Thanks so much, AMC Bigums, for posting up a screenshot here, which is similar to the information we have here previously from Stonk Vision. I appreciate you as well, my friend. Everyone in the think tank, you guys are huge contributions to this community. But you can see the resume time on these limit ups and limit downs for AMC was at 9:46 a.m. Eastern Standard, 9:52 and 9:58. Then you had APE at 9:43, 9:48, 9:54, 10:02, 10:10, 10:19, 10:30, 10:40, 1:43, and 3:38 p.m. Eastern. Fucking insanity. This shows you the absolute desperation. Anybody in the think tank want to chime in? By all means, you are more than welcome to. But this shows the 100% desperation that's occurring on the markets here and the lack of liquidity in APE. The AMC preferred equity unit is extremely difficult for these assholes to get their hands on. The DTCC only has one APE for every one share of AMC that's supposed to exist. And the reason that many people in the United States and Europe, especially in Canada, have not received their APE is because there's not enough to go around. Therefore, when you have paper-handed bitches like Paper Hands Portnoy and Paper Hand Real Me Kevin out there selling off their APE shares, it is helping short hedge funds. And holding APE and AMC shares and buying more is creating a massive problem for them in the fact that they've already sold way too many synthetic shares. Now they're struggling and trying to turn over APE from paper-handed bitches like Portnoy and Me Kevin to other apes and other retail investors in order to deliver them their AMC preferred equity units. Bamafu, which should we buy more of, APE or AMC to grow? My friend, I'm not a financial advisor. I'm not here to provide financial advice of any kind. I cannot tell you what to do. I cannot tell you what, when, how, or where to buy or sell. I can simply tell you that buying on lit exchanges, lit markets, is extremely beneficial to you as a retail investor because a dark pool, for example, is very, very limiting in the price discovery sector. A dark pool will actually only present about, how can I put this? 1/1000th of a penny in price differential for every dollar spent, where opposed to a lit market might actually show only 1/100th of a penny or 1/10th of a penny. So there's a huge differential in the way that people trading on Robinhood and Webull are negatively affecting the stock price simply because of payment for order flow that goes to market makers that have price distorting dark pools like Citadel Connect. Buying on IEX and going direct to the exchange is extremely important. And that's why I'm working on a broker dealer by the name of Lit Exchange. And we are directing all orders straight to IEX and lit markets only. We are not going through price distorting dark pools per se, like Citadel Connect. That being said, we are still in the beginning phases and expect to roll out beta testing and a founders program here in late 2022, early 2023. If you'd like to sign up, you can check it out on my Twitter for a link, or you can go to litexchange.app for more information if you'd like to sign up for the beta. Again, we are not open for business yet. We still have some final approvals to go to, but if you'd like to sign up for the beta, you can enter your email address. We will never share or sell your email address to anybody or give it away for any reason whatsoever. This is simply in case you want to be contacted for when we are ready to launch our beta testing segment. Thanks to Ooga Booga over here for posting other, what we just showed you here as well on the limit up, limit down advisory board. When the people in charge of the halts are stopping the shares from trading 13 times for APE and 3 times for AMC, and they're all the ones that are shorting, well, the majority of these guys are shorting AMC and GameStop and APE, well, that creates a situation in which they've got absolutely no choice but to short the stock. Zach G asks, do I think the next few months for the market will be rough? My friend, this stock market's going to crash at any moment. I can't tell you when it's going to happen, but at any day, the stock market's going to very well crash. And when that happens, and blue chips and equities and bonds lose a lot of value, well, shorts will have to close out positions. And there will be a mother of all short squeezes. Again, I'm not a financial advisor. Thanks again to AMC Bigums for posting this tweet. Special margin maintenance requirements increases. Ladies and gentlemen, it was not even 10:15 in the morning Eastern time, and stock ticker APE, had increased margin requirements on E-Trade from 30% to 100%. We're gonna be so damn rich. It's fucking hilarious. I still find it funny that some people think I'm joking, or that I'm being facetious, or that I'm just like trying to collect views or grabs people's attention by saying that. No, that's literally what my TLDR, the too long didn't read, was for my multi-page long Reddit posts that I was doing, last year, stating that hyperinflation was going to destroy our fucking economy. The government and the absurd amounts of money printing that occurred through first COVID and then Ukraine and soon monkeypox and Taiwan are what have led us to this time and point in hyperinflation, the real estate bubble, the bubbles in asset classes such as crypto, stablecoins, real estate, bonds, stocks, equities, and the ridiculous amount of shorting that's occurred by companies like Archegos Capital, for example, who imploded, a family office that imploded last year, and other companies like Melvin Capital, who closed down this year, and I'm pretty sure has yet to actually close out their short positions. Not to mention Tiger and about 100 others that I can't remember right at this time that have gone bankrupt in the last year. Big shout out to Ryan Tannehill on LinkedIn. He states the August 22nd market debut of AMC special dividend, ticker symbol APE, will go down as one of the most fraudulent days in the United States stock market. The ticker was limit up, halted at least 9 times. It was 13 for the record. I don't fault Ryan for not knowing that. That's okay. Following absolutely no rules of the LULD system. Then allowed to free fall with absolutely no limit down halts. And he's not lying on that one. Many brokers have not delivered the special dividend at all. I could see everyone in the comments right now. I could see how many of you are telling me right now that Cash App, I haven't received my shares. Avanza, I haven't received my shares, and so on. Some have received, many have not. And I'm not surprised in the slightest. I would contact your broker. I would contact your broker-dealer immediately. I would contact the DTCC and FINRA. Google their phone number. It's not hard to find them. Ryan Tannehill continues to state the U.S. Securities and Exchange Commission and FINRA should be ashamed of themselves. The same day as the launch, FINRA's website had a mysterious outage. Convenient, disgraceful, and fraudulent, he continues to say. I have not heard of any of these FINRA gateways having service disruptions in the last 2 years. And today, on August 22nd, 2022, from 12 p.m. to 1:15 p.m., there was a disruption in the service that it was under investigation and eventually resolved, where FINRA Engineering was aware of the issue, but the Securities and Exchange Commission could not log in. Ladies and gentlemen, it's only a conspiracy for a short period of time. Eventually, the majority of them are proven to be correct. And this is blatant manipulation, in my opinion. As a former network field engineer, it would be very easy for me to withdraw the ability for people to log in or to close different gateways or ports of access, for example, or even entire domains to make sure that anybody at an sec.gov domain is unable to log in to our portal. This is very easy. I could probably do in about 30 seconds or less. This is all alleged. I don't have any proof that that is what happened, but usually the simplest answer is the correct answer. Check this out, my man Jan Jack AMC on Twitter. MOASS in yo ass. The liquidity fairy says Ape broke the settlement system on Wall Street today. And it sent the entire mainstream media into a frenzy. The unprecedented FUD spreading and naked shorting panic. FINRA plunged in today. An all-day system outage preventing the SEC from monitoring FINRA systems. It's called Checkmate because this is the end game. As you can see, HDK ran from $7.15, $13 to $2,500 a share. And I believe that's actually HKD. I believe he may have made a typo there. I could be wrong on that, though. HKD ran up to $2,500 on NYSE and was only halted a few times. Megal from 8.5 to 8.8 went from $50 to $250. GCT from $19 to $62 on 8.18 and 8.19. And today, Ape is around $7 range. The value of AMC and Ape is now combined in a basket of derivatives called AMC1. AMC1 is the combination of the price of AMC plus Ape. None of those stocks besides Ape is a danger to the rotten and broken Wall Street system and swindlers. None of those stocks were greatly shorted and with tons of synthetics and naked shorts and held 85% by retail investors. 85% of the float of AMC is owned by retail investors. Ape is an untamable wild beast that is here to end the T+2 witchcraft that banks, short sellers, hedge funds, and brokers play with to manipulate their own debts and credits for opportunities against companies and retail investors. Ape is a T+0 traded stock because it is a preferred equity. Big shout out to my guy Justin Yamek on LinkedIn. Good friend from the think tank. I'll take questions if you guys want to throw some questions our way. If you have questions, put them in the chat now and I will try to address them. If it's a good question, that is. Here's an overview of 2008 versus 2022. And it's a pretty clear one. Looks like we've got an easy chance to leg down here if we follow the yellow from 2006 to 2008. Looks like that was a low there of around 1,260. Since 2008, go ahead, bro.
Here we go again.
Let me scoot that over so you guys can see that. Oh, there we go. Now you can see it a little better. Yellow line is 08, 06 to 08. And the white line is today. Here we go again. It's not a coincidence that the algorithm looks almost exactly the same. The only difference is we're at much higher levels now because since 2008, the federal government has printed tens of trillions, if not hundreds of trillions of dollars. Hundreds of trillions, let's be realistic. Because the total notional value of derivatives in the world now is exceeding hundreds of trillions of dollars to the point where it's in the 8 to 10 quadrillion dollars for worldwide derivatives. These derivatives are just bad bets. There's nothing really that is holding them up, with the exception of the illusion of these bad bets maintaining some sort of value. Huge shout out to my guy Peter Hahn on LinkedIn. He said, too busy to do a detailed post, but AMC's APE unit went live on the NYSE this morning. In the first 30 minutes, APE had been halted at least 4 times and AMC at least 3 times. If there was no issue with the AMC float, why so many halts right off the bat? Why have many brokers not provided their clients notification of APE in their account, as was supposed to have happened as of the close of business on August 19th? Many are stating August 24th. Some have said 4 to 7 days, and some brokers have no answer. Trading in this stock has become a circus, with many Main Street media attributing AMC's drop from $18 to $11 this morning on concerns about Cineworld bankruptcy, and not mentioning the APE dividend, which is essentially a share split with a second security, just that APE is unique from AMC. Watching the developments unfold, but it's clear the dividend has created chaos for the brokers, and one doesn't have to think hard to wonder why. Frank Forster chimes in, it's absolute chaos, even with German brokers. There are only spongy answers when it comes to APE. The stock trading system is definitely highly manipulative and needs to be destroyed. Wall Street is a corrupt network. Peter Hahn continued to say, I still can't get over the fact that JP Morgan just pays a fine and is allowed to continue being the dominant player in the precious metals market. Is there any assurance that they're not continuing to rig the market? How do we know they're not conducting similar activities in Forex and FI trading? They were certainly not clean in previous market scandals. Novak from JP Morgan was the global head of precious metals trading. The global head of precious metals trading. He was found guilty in federal court of multiple counts of manipulation, wire fraud, and spoofing. It would be naive to single out JP Morgan Chase when I know such ethical lapses occur throughout the industry. I certainly will be avoiding interacting with JP in any capacity if I can. But the real blame lies on the enforcement. The lax enforcement and supervision of the CFTC. Rostin Beanham is happy to see any silver spike tamped down and seems to be okay with SLV being used as a printing press to create endless amounts of short paper futures contracts. The former head of the CFTC, the Commodities Futures Trading Commission, was Heath Tarbert. Heath Tarbert is a former American lawyer and former government official who was the 14th chairman of the commissioner of the CFTC. Prior to that, he served for the Treasury for International Markets and Development, acting under Secretary of the Treasury for International Affairs. As of April 6th, 2021, Heath Tarbert is now the Chief Legal Officer of Citadel Securities. Do you understand why we say that we're dancing with the devil here? We are absolutely dancing with the devil. And Rostin Beanham assumed office January 21st of 2021. He was preceded by Heath Tarbert, and he was put in place by Joe fucking Biden, Sleepy Joe. For those of you that are unaware, the CFTC is an independent agency of the United States government that regulates the United States derivatives markets, which includes futures, swaps, and certain kinds of options. The majority of manipulation that was occurring in 2008 has not ended. Dodd-Frank just forced this to move from the United States to overseas, therefore removing the Securities and Exchange Commission oversight and removing the Dodd-Frank Act actually having any effect. because all they did was move it to a place where Dodd-Frank didn't exist, overseas. And this is overseen by Rust and Beanham at the CFTC, Commodities Futures and Trading Commission. They regulate futures, swaps, and options. And Heath Tarbert set all of those regulations up before he went to become the chief legal officer of Citadel Securities. Again, these are the same guys who are in charge of the Limit Up, Limit Down Advisory Committee. BlackRock, State Street, Goldman, Citadel, TD Ameritrade, Virtue, and Jane Street, along with Cboe Global Markets. They're the reason that they had to halt 13 times on APE and 3 times on AMC. Look at the CFTC Global Markets Advisory Committee, and you can see who is influencing policy. Just like Bill Ackerman advises the Fed and is continuously calling them out for being behind the curve when he is massively short treasuries to begin with. Sorry, just kind of a weekend for me. Don't get me started on the DTCC. Here's the article. Many articles available right now. JP Morgan gold trading boss and former board member found guilty by United States jury. Another fantastic, phenomenal post from Peter Hahn, and I will end it here because this shows you that the Federal Reserve is absolutely trapped. There's over $28.5 trillion in debt, and interest rates are at all-time lows. The government has not stopped printing money. The Federal Reserve, which is not an arm of the government, has not stopped printing money. And this has just led to further hyperinflation. They've continued to raise rates very, very slowly, and they could maintain themselves behind the curve consistently. A crash at this point is inevitable, although it is being delayed for as long as possible. But so was 2008. So was 2000. So was 1987. So was the 2010 flash crash and the 2020 COVID crash. After which, the only thing that saved us was the printing of money. Meanwhile, the United States and Europe are tightening. You've got China and other countries in Asia continuing to ease and printing more money. But the United States is not really tightening. They're using the overnight reverse repo program in order to fund banks and give them a 2.3% APR bailout every single day. Today, the reverse repo program was $2,223 billion. $2,223 billion in RRP with a 2.3% APR one day alone. That means hundreds of millions and billions of dollars are being given to banks every single week. It's ridiculous. I'll take a couple questions from you guys. Yeah, reverse repo is way high again, and by the end of this, you're going to be seeing RRP. By the end of this month, you're going to see RRP at $2.5 trillion, $2.5 trillion, in my opinion, by the end of the month, maybe 2.6 trillion. See if you guys got any questions over here. What's going to save us this time? Asked Y Carnes. There's nothing that's going to fucking save us this time. The government can't raise interest rates fast enough. They have to continue to raise interest rates. And if they try to slow down or reverse course, they're just going to lead to more hyperinflation. If they print more money, which is the only thing they can do, it's going to lead to more hyperinflation. Further bubbles and asset classes that will eventually burst. There's no way out. The reverse repo program is in full swing every single day. Bond yields are inverted. We're in a recession and soon to be depression. Anybody who tells you otherwise is either biased or doesn't really know what they're talking about. The government is absolutely lying to you repeatedly about this. Spoofing, for somebody that just asked about spoofing. Trader places multiple large orders. It's a bait and switch tactic, and then the market reacts to those large orders and starts following suit. Then before that actually occurs, this is something that JP Morgan was just found guilty of, and we just talked about in the previous article from Peter Hahn. Then the trader cancels the orders after the reaction of the market, which sends the stock price in one way or the other, preventing them from actually having to make a trade. All they did was influence the NBBO, the National Best Bid and Offer. Then the trader takes the other side of the trade, because they know which way the market's going to go, and makes a shitload of fucking money. Rinse, repeat, wash, sale, and you're back to where you started. At the end of the day, when you're over leveraged to the tits, just pull one of these babies, use the SFT program, because you need more collateral, and to borrow a bunch of shares from JP Morgan and the overnight pawn shop. That led the stock price from $10 to $17.80 in a 5-minute time period and back down. It's really quite simple, ladies and gentlemen. Don't believe the fear, uncertainty, and despair that is out there. For now, you're going to have to deal with brokers that you have to manually route orders to lit markets, and they're going to want to press all of your orders through dark pools because it maximizes profitability, about 4 to 5x. Not to mention, they can then take the other side of the trade and put your order on the side and wait up to 27 or 28 days before actually having to process it. Then they can loop it together with other orders in a dark pool to distort price discovery and prevent the actual share price from being seen by anybody, because it is a form of price suppression, placing a large amount of orders on a dark pool to prevent the share prices from going up or down. I look forward to the day when I can present to you the beta testing and a further rollout of Lit Exchange. But in the meantime, if you'd like, you can go to litexchange.app, APP, and enter your email address to be signed up for our beta testing program. Once it launches, we will contact people in the order in which they signed up. Darkstar, yes, sir. He asks, do I know anything about Phase 6? Yes, Phase 6 initial margin requirements are going to force banks to have more cash on hand. It's going to be a hot mess for a lot of banks, and that begins on September 1st of this year. It is definitely going to add more problems to the collateral issues that we're seeing. There's an interview on this channel that you can watch tomorrow. It airs tomorrow, actually, in which I discuss this with Dr. Marco Metzler, former Fitch Ratings analyst. And we get into a lot of depth as to onto that subject specifically. HYMC, Hycroft Mining Corporation. I did an interview with Dr. Diane Garrett about a week and a half, 2 weeks ago with Pantheon AMC. You guys can check it out on the channel if you'd like. I am very, very bullish on Hycroft Mining Corporation, and AMC is about a 25% owner of Hycroft Mining Corporation. So by owning AMC, you in turn indirectly own AMC, APE, and 25% of Hycroft Mining Corporation, even if you don't have a dollar invested in HYMC directly. It's really almost like an ETF basket now with a lot of assets and a lot of power beneath it that has been heavily, heavily shorted and manipulated. All that means is it provides better buying opportunities for me. Go ahead, brother.
AMC, the new ETF.
AMC is absolutely the new ETF. And I think it's a great thing.
Awesome. We're gonna be so goddamn rich.
Yeah, and no, there's no way out for the majority of people. I'm certain people are going to be just fine. Let's put it this way. But others, well, if they don't do something to hedge themselves for a market crash, for global equities crash, real estate markets crash, well, they're not going to fare very well. The next FOMC meeting is the first Wednesday of next month, I believe. Sean98, I want to mention Rule 201 states no halts on first day of trading. APE was halted 5 to 6 times. I want to mention on Rule 201, a lot of people have seen it on Twitter And basically, Rule 201 does not really say a whole lot. It is one of those rules that can be interpreted any way that they want. And to me, it really doesn't mean anything. They are able to, they're going to do anything they want. And if they find a price that they're not able to stomach for the time being until something prevents them from stopping it, they're going to stop it. Let's see if you guys got any more questions here for me. Merrill Lynch will still be holding my Ape shares. That's good. Arcade, have a great night, buddy. It's great to see you. The Real Steven asks, do the short positions stay the same since Ape is here now and the price of AMC is lower? No, my friend. Short positions have doubled. As a matter of fact, a lot of people don't understand this, but Adam Aron actually forced the shorts to double their positions by issuing the AMC preferred equity. Just the way that you now have 2 long positions, shorts now have 2 short positions. Double trouble. Double trouble. A lot of people don't understand these situations and don't realize that it almost, in my opinion, doubled the synthetics and naked shorts. And that's a great thing, because the more synthetics and naked shorts that exist, the higher the potential share price will be during the actual mother of all short squeezes. So I hope that answered your question, my friend. Looks like Jesse Matthews says, Wealth Simple is a bunch of cucks. I don't have my ape yet. That's phenomenal. Yeah, the halts at open were a lot of fun. I was expecting every little bit of it. I was not surprised in the slightest. And in the after hours, volume went from 60 million for the day to 120 million. We literally doubled our actual volume in the after hours. That is tremendous. Extra pickles, it's not share dilution. And either way, if you want to call it share dilution, I'm fine with that, because it's a dilution that I can get behind. Apes need to be delivered at all costs. All costs. And when you've got criminals like this in power, it might take a while. They might fail to deliver for 35 days, but eventually they will deliver.
Let's get back to the question, the larger issue about Putin's tax. That's really Putin's gas hike. That's his gas hike. So much of this increase in the gas tax, gas price started weeks leading up to what happened there.
I don't know about that, Nancy.
These are the people that we're dealing with, ladies and gentlemen. These are the people that we're dealing with, ladies and gentlemen. Former United States Treasury officials, plunge protection team officials, the SEC, the CFTC, Citadel Securities, Virtue, BlackRock, companies that are losing trillions and trillions and billions of dollars each quarter. They're clinging desperately through the use of 12 halts in one day and 3 halts in one day for AMC and Ape. That's all it is. Yep, that was Speaker of the House Pelosi, for those of you that are unaware. Citadel did take out that $600 million loan. Ken Griffin needed to bolster the stability sheet of Citadel Securities. Articles claim that they but they borrowed 600 million because they needed more trading funds, and profits are doing so well. Does that sound right to you? Would you need to borrow 600 million if you just made billions? No, that's right. Because Citadel's most recent 13F filing shows us that they lost 94 billions with an S. Meanwhile, precious metals, just like AMC and GameStop, continue to be manipulated. There was a further reduction of 685,000 ounces of registered silver on the COMEX. They added 141,000 unwarranted that can be moved to registered, which is still a reduction of 543.6 thousand ounces, troy ounces of silver. That is a massive withdrawal from the COMEX, and it continues to decrease. The open interest, open futures contracts that are each indicative of 5,000 ounces of the underlying asset has increased by 1,241 contracts to 145,000 contracts. You got to remember, you got to multiply that by 5,000. The open interest is many, many times higher than the actual available silver on the COMEX. We're going to see a massive, massive squeeze in equities markets, massive bubble crash, a crash and bursting of these bubbles, and a ridiculously large amount of meme stocks and precious metals that are going to fly. They're going to go to the absolute moon. And that's why I wear this hat. Not only is Pink Floyd one of my favorite bands of all time, but I'm wearing this hat all the way to the fucking moon. This is my MOASS helmet. We're going to the dark side of the moon. Sean98 says capital gains alone could pay off the national debt. Why is the government preventing the squeeze? Sean98, I'd like you to consider this. The government is going to pay off the debt off the backs of the 99% by the use of inflation. Increasing the inflation rate makes it easier for the United States to pay off their debt. They would rather hurt people to pay off their debt than help them. Either way, they don't have to pay it. We have to pay it. And that's why they continue to print billions more for Ukraine under the guise of humanitarian aid. That's why they printed trillions and trillions of dollars, 40% of all money in existence, in the last 24 months or so since COVID began. It was all ruse. It was all sham. Mark Jones, options thoughts. My friend, the options are extremely bullish. I am the proud owner of many AMC options and AMC1 options. And it feels great to know that I've got them. And that when I exercise some of my call contracts, I'm going to force my AMC and APE shares right up the market maker's ass. And it's going to cause gamma squeezing, delta hedging, and fear of missing out buying. I'll be more than happy to contribute to that and do my part. Kiwi Girl, if you want to elaborate, by all means, but I pretty much explained everything there is about APE that I could think of at the moment. Justin Hamby asks, are you worried about paper handing from some of the community? Absolutely not, my friend. I 100% expect some people to be paper-handed bitches like Dave Portnoy and Real Meat Kevin. And that's an inevitability. But I do know that over 4 million investors strong are going to want to maintain their position in AMC, APE, and AMC1. The combination of which AMC and APE combined equal AMC1, the new derivatives basket. in which is the actual sum of our gains. At any moment, broker-dealers actually have to deliver this stuff to you. For now, a lot of people haven't gotten it. And it might take 35 days or more in which failures to deliver occur. And then eventually, in my opinion, we're going to start seeing some massive increases in share prices. On top of that, it is going to lead to volatility in both APE and AMC, thus causing the options contracts in AMC1 to go to the fucking moon. Clap64 asks, anyone able to buy options today? I couldn't. Yes, I was able to buy options on AMC1. Stock ticker AMC number 1 is the new ticker for AMC, because you have to take the AMC shares, combine them with the APE shares. Together they're in a basket called AMC1. You then have to buy the contracts for AMC1 per my understanding, because I was not able to buy any for AMC, which is fine because I want my call contracts to get 100 APEs and 100 AMC. Why would I want to get just 100 AMC when I can get 100 APEs and 100 AMC by buying my AMC1 call contracts? So I'm very happy to have the ones that I do have, and I'm going to continue to buy more. Yeah, Deborah Hartley says Matt Kors is no better than Meet Kevin at Spreading FUD, and I'll be honest with you, he's a young guy, and there's a clear lack of education and understanding about equities markets from some of these individuals, and that's okay. I don't expect everyone to know anything, but a lot of times, if you don't know anything, it's better to shut the fuck up, because if I don't know something, I will come out and tell you. I don't fucking know. You've heard me say it before. Clap64, I did it on IBKR, Fidelity, Schwab. I know other people that did it on Webull, Robinhood, Public, Moomoo, lots of brokers. If you're not eligible for AMC1 trading, you may have to request to enable trading and request your broker give you the ability to trade baskets of derivatives like AMC1. If you have a shitty broker that's payment for order flow only like Robinhood, well, then I can't help you. Heaven help you, because I can't help you on that at all. George Gaston, I don't really think, will the squeeze cause APE and AMC to moon? Well, George Gaston, the only thing that's going to cause APE and AMC to moon is collateral losing value. And that means equities markets, real estate, stock markets, crypto, bonds have to crash. When they do, and I mean proper crash, we're still in a bear market. We've got a long way to go before we see the bottom. And there has always been multiple rallies on the way down to the bottom. Always. Because these market makers are great at trapping people in call contracts on stocks that are not heavily shorted. And therefore, those Apple and Facebook and all these other stocks, the FANG mat stocks, for example, blue chips, are the babies of the market. They're the golden child of the market makers. They must maintain them at the highest levels possible in order for that collateral to prevent margin defaults on short positions. When the stock market crashes, then there will be margin calls across the board, internationally, between the DTC, the prime brokers, the hedge funds, the market makers, the family offices, the retail investors, and so on. Margin calls will be rampant. And it won't matter if the DTC calls off their margin call, because other banks are going to want their fucking money. When we have a Bear Stearns and Lehman Brothers situation again, it's not going to be just turn off the switch and everything's going to be fine. It's going to be absolute volatility that causes hundreds of meme stocks to go through the fucking roof. Don't forget, some people were selling fractional shares of GameStop for $5,124.50 a share on January 28th, 2021. Robinhood was physically unable to exercise orders in December of 2021 for people and they were only to get about $13 and change out of $146 worth of orders for an entire day. There's a black swan event that is landing on Wall Street. It's the end of the world as we know it, and I feel fine. I feel fine. Joy, it's not that we're looking for a market crash, is that there's such an over-leveraging occurring in these markets that it's an inevitability at this point. It's an absolute inevitability. The Federal Reserve has $2.8 trillion worth of mortgage-backed securities on their balance sheet. They've got an additional 4, 5, 6, 7, 8, 9, around $6 trillion in United States Treasuries. In addition, the plunge protection team is using abusive swaps on oil and the VIX, the DXY, the Canadian dollar, ruble, and other fiat in order to prop up the equities markets as much as possible. And this will continue until all of a sudden they can no longer maintain their current positions. They will be forced to close. This is the quarterly report on bank trading and derivatives activities from the Office of the Comptroller of the Currency for the first quarter of 2022. Four large banks hold 89% of the total banking industry notional amounts of derivatives. Only 43.4% of derivatives transactions occur on lit markets. That means around 56% approximately go through dark pools. Price suppression is rampant on markets around the world. Check this out. Commodity negative fair values has increased by 165% year over year. 165% is an increase of the gross negative fair values in billions for the commodities markets. So while they may have reduced a measly 13% of equities and 14.8% of interest rate exposure, they've increased their gross negative fair values in commodities and others over 165%. Most derivative transactions that a bank has with an individual counterparty are subject to a legally enforceable netting agreement. Some transactions may be subject to the laws of jurisdiction that does not provide legal certainty of netting agreements, in which cases banks must regard such transactions as separate from the netting set. Netting agreements allowed banks to reduce gross positive fair value exposures by $1.9 trillion in the first quarter of 2022. These guys are using continuous net settlement, the CNS program, to reduce their exposure and have done so by 86% in the first quarter. And this is legally enforceable netting. They are trading contracts with each other over and over and over again. These are rehypothecations. This is the net current credit exposure in billions of dollars. And it's being hidden much in the same way that Archegos Capital hid their exposures. A more risk-sensitive measure of credit exposure would consider the value of collateral held against counterparty exposures. Reporting banks held collateral valued at 97.1% of their total NCCE at the end of the first quarter, down from 107.9% in the fourth quarter. This right here proves to you that there is a collateral and liquidity crisis. They have lost an effectiveness of over 10% in net current credit exposure. The efficacy, the efficiency at which they're able to use bilateral netting to save their asses is reducing. And collateral held against hedge fund exposures decreased in the first quarter. How much did it decrease to? Well, it decreased to 535%. Yes, you heard me correctly. The collateral held against hedge fund exposures in the first quarter of 2022 is 535.4%. Bank exposures to hedge funds are secured because banks take initial margin on transactions with hedge funds in addition to fully securing any current credit exposure. This is why I know that they will margin call the hedge funds when things get out of control. Here's the ratio of fair value collateral to net current credit exposure. We'll just move right on through this. We don't have to go through every single thing in this. I just wanted to give you an indication. I could explain this single document for probably 3 hours, but we're not going to do that. The notional amounts of derivatives is massive. This is in billions of dollars, so this is $137 trillion worth. This is $200 trillion worth of total notional derivatives in the first quarter of 2022, up from $177 trillion in the fourth quarter of 2021. That's a huge jump in one quarter of, what's that, 23 trillion fucking dollars worth of derivatives? Yeah, there it is. $22.891 trillion quarter over quarter change, an increase of 12.9% derivatives. That is fucking massive. Massive. So, again, the TLDR here is we're going to be so goddamn motherfucking rich because these assholes don't know when to call it quits. They don't know when to stop, and that's why they continue to do things like this and have these limit up, limit down issues and commit wash sales and spoofing and naked shorts and selling synthetic shares and using fair value accounting in order to, and historical value accounting and fair value accounting to prevent themselves from getting margin called. We're going to go further into depth with this on our next video tomorrow with Dr. Marco Metzler. Go ahead, brother.
Hell yeah.
Jerome Powell, get the motherfucking money printer out, man, because you are going to need it. Get the money printer out. Think Tank, jump on in here. Thank you, everybody. Moralate, Bliss, J-Dub, TJ. It's good to see all you guys and girls. Thanks for coming out. Ridiculous. Ridiculous. 12 halts on APE, 3 halts on AMC. The writing's on the wall, ladies and gentlemen.
Bremen.
Have a great day. I wish you all peace and wealth. Holy shit, we're gonna be so fucking rich. Thank you, everybody. Appreciate your support. Fendi Lion, what's my outlook on this week? I hope APE goes down in price so I can buy more. The lower it goes, the more I can buy for a better price, personally. Same for AMC, but AMC can't really go much further down. A collateral haircut. A collateral haircut will be issued on stocks like AMC if they go under $10 a share. That's why I believe AMC will not go under $10 a share. APE may go down a little bit further, and that doesn't concern me in the slightest. I'll be more than happy if APE goes down in price in the short term, because I will buy APE, I will buy AMC, and I will buy a fuckload of AMC one call contracts. Because deep out of the money call contracts cause gamma squeezes, delta hedging, fear of missing out buying. Deep out of the money call contracts are where it's at for me. And shares. I love shares. Peace.